Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Yeah, pretend like I'm happy to be with you guys. Give me 1 second to mentally.
Need another second. Hold on. It's
Actually,
taking
it's
a
going to take me a
long.
long time. Hello and welcome to another edition of the Grain Feed, brought to you by Ever.Ag. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on what is potentially becoming a stormy day, but it's been a toasty one, and it was also toasty in our Platteville, Wisconsin office, where I was with a handful of our Chicago folks here Monday and Tuesday. So big shout out to the crew in Platteville, Wisconsin. Thanks for having us Chicago folks over the border, invading your town, if you will. I really appreciate it. Quality time with an amazing team up there. Joining me today from Wichita, Kansas, Director of Feed Foundations, Mr. J. Kingsley. And from way down in Atlanta, Illinois, Director of Biorelations, Mr. Verl, no doubt Prather. Team, how are we today?
I mean, just fine. I think we're going to catch a little storm later today, too, Jim.
Oh, wow.
Never been better.
Never been better, Verl. Is that true?
No doubt. Yep.
No doubt. No doubt. It has been an interesting run here, talking markets, watching this board. And Verl, I mean, you are on the, let's say, the grain side, where Jake is on the feed side. And just to differentiate for the viewers and listeners, of course, we have our Grain Foundations team that is representing the row crop farmer. We have Feed Foundations representing those feeding our animals. And no one's cheering for either side of this market, but there's an element of low grain prices and feed prices benefiting our dairy farmers, higher grain and feed prices benefiting our row crop farmers. So we are, I'd like to say astutely, monitoring the markets day to day here on each side, and Verl bringing you in to collaborate on a daily basis for us is extremely helpful. So thank you for being here. And as we watch these grain prices, what have been continuing to slide, it's interesting to note this bounce of the last few days, at least at the board for the time being. So we're going to talk about that in a moment. But first, Paige, if you would please kindly timestamp the broadcast. It is Wednesday afternoon. We're pushing about 3:30 here. A lot of yammering here before the recording started, much to Paige's dismay. So it's a little bit later than usual. But let's take a look at some settlements, because we had December corn close up 4.25 cents at 4.24. We had December wheat close up 3 at 5.61 3/4. Novi beans up 18 3/4 cents at 10.20.5. With December meal, that stubborn little byproduct, up $4 at 283.50. And we're gonna say Dees oil was up 28 points at 54.68. We got to keep giving Dees oil just a little bit of love here, because as we've talked about in the past few grain feed episodes or more, the wild little activity in that soybean oil market. We also had a Tech Talk grain feed mashup last week. If you missed it, please go back to last week's episode there and get a really great look at the technical analysis of a couple of our feed markets and how it's being impacted from a fundamental and technical standpoint. So really great work, Andy, Cody, and Jake on that crew. But now that we've seen the screens were green in Chicago today, what does that mean to our markets? Because Verl, as we bring it back to you, bud, it has been a very gradual slide. We saw the highs of this market for December corn, as of now, were achieved in February. And as of now, they're achieved in February, which in itself is a little goofy. But I think the trade winds and macro issues we've been dealing with in this calendar year of having the Trump administration and the trade challenges, mainly our key trading partners there earlier in the administration with Mexico and Canada, really igniting some of the furor in the futures markets And then, of course, the rest of the time is mainly charged towards some of our other trading partners. But it's in the headlines. It's impacting us. But I think, Verl, this big potential yellow wave of corn that we keep talking about maybe hitting the markets here this fall, that's what we're concerned with at this moment. That all being said, with Dees creeping its way back up to 425 to potentially celebrate that little bounce from the row crop side, what is your take on the markets as we push now into the second half of July?
Yeah, to your point, I mean, as someone who represents a lot of grain producers, it's been an extremely disappointing season, right? We typically rely on the summer to bring some sort of volatility and excitement to the corn and soybean market via a weather rally or two. And honestly, right, we just haven't seen it. And, the July WASDE report last Friday really did kind of lend a bit of a helpful hand to the balance sheet, at least of new crop corn. But fund traders, continued in their willingness to sell. And the estimate was actually a bit lower than what the trade had expected coming into the report itself. And, the reality is that trade is expecting, to your point, a massive wave of corn coming at us this fall. And, they're expecting that corn yield estimates kind of continue to grow and add a whole lot of extra buffer to this balance sheet compared to what the USDA is printing now. And to be fair, the crop is looking pretty darn good, right? I mean, we've got good to excellent scores at incredible levels across the Midwest. If you look at NDVI data through the Midwest, very respectable there as well. So it'll be interesting to see what the USDA throws at us in August on the WASDE report, but it does look kind of primed up to see a bit of an increase on yields on that report. Also, temperatures have been plenty warm so far. You mentioned the last couple of days. Even the last month around here has been really warm. We've had some warm overnight temps compared to, normal. And it's really kind of helped us catch up on some GDDs that maybe we were missing at the front end of the production season. And, it's hard to say, but a little bit of backyarditis locally, we are off about 6 inches of rain compared to average for this time of the year. But man, we just kind of keep getting them when it counts, it seems like. And the corn crop really hasn't shown a heck of a lot of stress, even in the hottest periods of the day. So, there's just a ton of potential out there on this crop right now.
Yeah, Verl, the note on crop conditions, especially as we view those reports every Monday afternoon from the USDA, I believe where we sit from a good to excellent rating, we are about 10% higher than what has been the 5-year average of those two combined ratings, the good scores, the excellent scores. In terms of what that means at this stage and being so far ahead, most of the Midwest is in good to excellent shape and in a big way. Also, as Jake has referenced on some of our calls and here on the show as well, I mean, even deeper south, right? We're seeing conditions that folks have not seen before. People are getting rains that they do not usually see this time of year. So I agree with you, Verl. That Friday WASDE report, which we could argue is old news now, I mean, a few trading days later, but I think it's very significant because one could argue without looking at the board, that was a supportive report. Like, take the screens away and we say, yeah, okay, like things might have tightened up a little bit. And I believe globally as well as domestically. So, I mean, we're looking at something this year on July 16th of 2025 and saying, it's a decent sized balance sheet, but it's not a massive balance sheet. Think of where we were trading a year ago. We were assuming a bigger balance sheet at that time. So, I mean, Verl, can we almost take the clock back a minute? Like when we go back to last summer, conditions not as strong at this time. The balance sheet, though, was projected to be larger, lower acreage, and we were starting to make our way towards $4 corn. And by early August, we had pushed these futures all the way to $3.85. So with this formula this year, it is unique compared to where we were last year. It's not quite the same. So what's your take on what the funds might continue to do here? Let's say weather remains unchanged. They're working with a tighter balance sheet at the moment. Do you think they're going to continue to push, or do they kind of hold for the time being, take some profits? Perhaps that's what we're seeing the last few days is some short covering. I know we've got some macro headwinds there too, but do you think they're going to continue to drive the way they've driven to this point, or are they going to pause for a bit and see how the rest of July looks?
In my opinion, I think it's the stage is set for them to kind of pause here. And one of the reasons being is that, to your point, last year on the July WASDE report, the USDA was expecting for this year's ending stock number to be 2.1 billion bushels. And right now, their latest estimate is 1.34. That's an 800 million bushel miss compared to last July's estimate, right? I mean, the reality is this thing can change quickly in either direction. I think it's a great reminder to folks to not get complacent, whether they're marketing grain or they're buying grain. Stay active and ahead of the markets here, or try to stay ahead of the markets. I think that they very likely could kind of sit back and hold off here and kind of wait for some movement on this WASDE report in August before they really hit the gas on selling again.
And I think the WASDE report for August, is that going to be our next potential yield update then from the USDA, in which they would actually change their projected yield number? Is that going to be that August report?
Yeah, yep, that's correct.
Okay.
And oh, by the way, we've got about 2 weeks left on some of these tariff barriers that could potentially pop up as well.
Yeah, exactly. There's plenty for managed money to be watching as we move into the next 2 weeks to wrap up this month of July. Jake, as we do so, and futures have at least found a bottom for the moment, and we do have some potential upside risk as we move into the second half of this month. What are you seeing on the cash side of things? Because we did reference there a moment ago that it's not just the Midwest seeing some wildly optimistic conditions. It's your neck of the woods and further south that you're talking to folks that are seeing rains in July they haven't seen in years, let's say, right? So, I mean, what's your take on what we're seeing nationwide from the feed standpoint?
Yeah, cash values by and large have kind of steadied out, with futures having found what appears to be at least a short-term bottom here. Corn basis continues to be pretty stagnant. We haven't seen a whole lot of movement in that here in a handful of weeks. I suspect that most of that is driven by a lack of farmer selling with this significant slide in futures. Not a lot of corn producers are going to be incentivized to sell the next crop when we're down here flirting with 410 futures now. So that one's been quiet. I think at some point, with the crop condition ratings that we're seeing and the weather forecasts that we have, these folks know they don't have the bin space to hold it all, and they will eventually have to start to sell some. And if all else stays equal, we'll likely see a breakdown in both futures and basis. Until then, though, I mean, we've been working with a lot of feed buyers, telling them to be pretty aggressive on their bids to get basis for the next feed cycle, meaning for most of our folks in the Midwest to try to get something a dime or 15 cents a bushel better than what's out there right now, that would really approach typical harvest lows to start their buying. And then maybe by the time we get to harvest, you can punch below what we would call typical to book up the rest of what you need. For folks in these more rail dependent markets, we're talking about, I think these are very aggressive numbers in the current set of circumstances, but to try to get a corn basis 20 or 30 cents a bushel better than where we're at right now maybe seems unrealistic to some traders, but it gets back down into the high end of our old range. It's a 20-cent improvement on some of the best numbers we had last year. And there's just a lot of feed out there. Not only are we seeing really good conditions on corn and on beans, but across a lot of the country, folks are seeing very nice yields on other forages that they've grown and are putting up now. We've had discussions with some dairies about trying to decide which crops to take into forage and which crops to send off as dried grain, because they have a limited amount of space to hold this stuff on farm. So they've got to start considering that early. And those are good problems to have. To have those types of options as a dairy producer or livestock producer is a very good problem to have at this point in the year. On the protein side, we continue to have this breakdown in futures, and we're also now starting to see another little trim lower on basis, as I think 45Z made its way through, and these crush facilities have a little more confidence in what their profit margins may be in the next year. They're a little more willing to start to unload some of these byproducts, knowing that soy oil will be their true primary revenue driver. And so we're seeing a little bit of suppression on soybean meal and canola basis again. A lot of folks have already stepped in and bought a big chunk of what they need for next year. If you haven't already, I think certainly it's worth stepping in and getting all of your October through December stuff bought on a cash contract, both basis and futures, and considering doing the same on your January through March portion. I think we've been kind of quiet and patient on the April forward piece just because of the carry in the futures board. But there again, basis is very attractive along that stretch as well. So plenty of stuff to be working with your vendors on here. There's good opportunity to manage risk on the exchange with the board being down, but there's also some opportunity to get in front of your feed suppliers and indicate what you're willing to pay for feed if the prices you see today are not it. And I think those are going to be important conversations to have early, as typically the first folks to get that stuff bought as the market moves that way are going to get some of the better values. So I think one other thing we've been watching pretty closely has been the cotton market and how that's going to shape up. And conditions on that are pretty good as well. A little better than they were this time last year, but we were talking weather before this, and it can get hot and dry, particularly over western Kansas and the Texas Panhandle, where a lot of that cotton is produced down in the Texas cotton patch, and burn that up pretty quickly. So we've still been pretty adamant about owning a good portion of what you need for the next year on that crop, just in case this thing does deteriorate quickly. But right now things are sitting in a decent spot for those that do have cotton acres out there.
Okay, good deal. Well, thanks for that, Jake. Appreciate that coverage. I think before I let both of you gentlemen leave for the day, we're just going to borrow bold predictions here from Phil and Kathleen on the dairy download. So bold prediction, let's say between now and the August WASDE Verl. Let's say we close December corn today at 425. Let's round up a penny to 425. What do we trade first between now and August WASDE? Do we trade 450? 450? Do we trade $4? Or I'll even give you the neither option. We don't trade either of those. What's your call, Verl?
Next 3 weeks, I'm going to say neither.
Okay.
Maybe we go flirt with this gap up here near 432.
Sure. Okay. So there's a 3-cent gap from the 4th of July holiday weekend, in which we have a 432 3/4 low, and then a 429 3/4 high from that Sunday night Monday session, a 3-cent gap. Do we close that gap between now and the August WASDE?
I'd say yes.
Okay, so we close that gap. We won't trade 450, but we'll go close that gap, and we won't come down to $4. Jake, between now and the August WASDE, D's corn, 450, $4, or neither one?
$4 all day long.
$4 all day long. Okay, so Jake, do we close that 3-cent gap during that stretch of time?
No.
No, fantastic. We're not far from it. We're not far from it. But you're saying where we're sitting now, it's about as good as we're going to get between now and August WASDE. Not closing the gap. We're going to $4. Jake, let's just give the viewers a bonus then. Bonus question. How low do we go between now and August WASDE? Bonus bold prediction.
Between now and the August WASDE, I think we go revisit last year's low, 385, 386, whatever that was. I think we're going to go lower than that before it's all said and done, but I bet we get there before the middle of August.
I'm writing this down in my Ever.Ag notebook.
I'll do the math for you if you want to know how we're going to get there.
No, not a math guy. Not a math guy. I just talk real loud. I don't do math. Just talk real loud. All right, so we're going to break down into 385. We're going to achieve last year's low for December. Verl, how do you feel about that? Them fighting words, Verl.
That's right. How far is Kansas? Might need to book a flight to Wichita.
Well, we'll see. And the reason I ask is because between now and August WASDE is because then that WASDE could be a nice wild card then to determine how conservative is the USDA potentially going to be with those production numbers versus some of the demand numbers, that we've been witnessing as well. So it's going to be really interesting. Maybe we'll reflect back on this episode once we get through that August WASDE report. But until then, Verl, Jake, thank you both for being on the show. Great to have your insights today.
Thank you, Jim.
Thanks for having me.
Absolutely. Absolutely. And we'd also like to thank the Ever.Ag Insights crew for their support. Big thanks to Paige for production magic. And thank you to the viewers for watching the green feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.